Welcome to a deep dive into the powerhouse performance of BLS International. We are reviewing the Q3 FY26 results for a company that is currently seeing massive growth, record margins, and is incredibly cash-rich. Let's start with the elevator pitch. BLS is seeing a massive revenue surge, up 43.6% year-on-year to 736.5 crore rupees. Their speed of execution is incredible. In just 9 months, they've matched their entire revenue performance from the previous full year. Looking at the core financials for Q3 FY26, revenue hit 736.5 crore. EBITDA stands at 198 crore, up 25.3%, while profit after tax jumped 33.1% to 170.2 crore. This brings the earnings per share to 3.95 rupees. The first growth engine is the profit machine, Visa and consular services. Revenue here grew nearly 20% to 449.3 crore. The alpha insight is that segment margins hit a record 40.1% as they transition to self-managed centers, capturing more value per applicant. Engine number 2 is the growth rocket, digital services. Driven by the Ada Fidelis acquisition, revenue skyrocketed 109.3% to 287.2 crore. Most impressively, loan leads generated jumped to over 9,700 crore, compared to just 2,900 crore last year. You might notice the consolidated margin dipped from 30.8% to 26.9%. This is intentional and due to a mix shift. While the lower margin digital business is taking up a larger slice of the pie, the core Visa margins are actually expanding. The balance sheet is a fortress where cash is king. BLS is debt-free with 1,306 crore in net cash available for acquisitions and dividends. Even after a 1,000 crore acquisition spree in FY25, their war chest remains full. Their secret weapon is negative working capital. Because customers pay up front and expenses are paid later, the company generates massive cash flow. This leads to high capital efficiency with an ROCE between 22 and 28%. With a market cap of roughly 13,221 crore and a return on equity of 31.3%, the company is delivering. They've also declared a first interim dividend of 2 rupees per share, which is 200% of the face value. Visibility for the future is secured by global wins. BLS holds contracts covering over 80 countries. Their competitive moat is built on long-term, exclusive contracts lasting 5 to 10 years, ensuring predictable cash flow. Of course, every investment has risks. These include geopolitical sensitivity impacting travel volumes, reliance on major contracts like Spain, and the potential for government policy changes to impact fee structures. Our due diligence checklist shows no gap between profit and cash flow, growth is driven by volume rather than one-offs, and zero receivables from embassies. The accounting verdict is clean. The final verdict, BLS is successfully scaling. The lower margin dip is a calculated trade-off for massive expansion. With debt-free balance sheet and new global wins, the stance is constructive and bullish. Stay ahead of the market. If you found this analysis helpful, please like, save, and share this video to support the channel. Follow and subscribe ZinvestZ for more such smart investing insights. Thanks for watching.